Ladies and gentlemen, good evening, afternoon, wherever you are. Today we're here with RetireEduConnect, and we're talking about the Future of Insurance podcast. Here with Bill Fagans, Tyson Price. I'm Bryant Fagans. I will be your host and your interviewer for this evening. Just a little bit about myself, Philadelphia native. I've been in commission-only sales. I started at about the age of 12 years old, selling insurance, knocking doors, selling newspapers. I've been an insurance adjuster for 18 years. I've been selling insurance for about 6 years and also do insurance claims across the country. So we're here talking about something that is very, very valuable. It is the Future of Insurance podcast. Today, we're going to talk about the principles of insurance, the occupation of insurance, the directness of insurance, the carriers of insurance, the application, the systems, and the transparency of the purpose of why insurance exists. It is an aleatory contract. It's a contract of adhesion. It is a small payment for a big price. It is something how we generate wealth in this day and time, how we protect our assets, and it's how we bring security to the ones that we say we love. So I want to speak today and interview these two gentlemen about their time in insurance. My brother, Bill Fagans, has been in the insurance industry for 20 years.
That's right.
Correct?
Correct.
And Tyson Price, he's the old head here. He's been in for 33 years, correct?
Yes, sir. That's right.
On the financial side of things.
Yep.
All right, gentlemen. So let's talk about, give me an introduction about yourself.
Hey, I appreciate that. I love that acronym which you did for podcasts.
Just made it up as we said it.
You say that one more time. I like that.
Principal, occupation, direct, carriers, application, system, and transparency.
You know what? I'm just going to flow right off of that. But anyway, for the sake of time, I love that. But I'm Bill Fagans. I've been in the insurance business for 20 years. And, I love it. It's been more of an independent experience, for myself, going out there, learning how to sell, reading books, being motivated and just being inspired by people who are doing better than me. They always say audit your circle. So I always wanted to audit my circle and be around, people in the insurance industry. But I started out, as a bellman, downtown affiliate, and I met an insurance agent who was doing extremely well. And I love the lifestyle, which they talk about right now, right? Lifestyle is currency right now, right? And that's all they're selling is lifestyle. So I knew it was something I wanted to tap into, seeing a guy, his lifestyle it was amazing, and he said, you need to get your insurance license. And I did. And I was a debit agent running around Kensington trying to, collect debits back then. This is 20 years ago, and that turned into a nightmare, but I was selling, but what I liked about it was that at that time, it taught me a lot. It taught me how to go out there and work hard, get your hands dirty and get out there and earn, a living for your life and just be motivated. And at that time I was reading books and, I was learning more and more like, people like authors like Brian Tracy or Tom Hopkins, things like that. And I started changing my mindset, like, hey, I can get out there and really start selling. I just need a good product, a good sizzle, and I get out there and start selling. So I remember Part D came out in Medicare and I was at a storefront and all the people would come in, and they would have to get Part D from me, and I was like, well, I'm getting $60 every time somebody walk in here. I was just like, I'm just sitting in here and I'm like 22 and I'm like, oh, just $60. Everyone that came in, like all day, it was like 30 people coming today. I was like, they all got to get it from me. And then I remember when MAPDs came out, and they first came out, we were selling these things before MIPA laws. We were selling this all over the place. I mean, I was in New York selling it. I was just all over the place. I mean, this is back then. I mean, you can give somebody a T-shirt and get a MAPD plan. I mean, it was crazy. Nobody had it, and it was a cash cow. And we just kept building. One thing I was doing a lot, I was always bundling. I was bundling life insurance too, because they really needed it at that time. Because remember, I came in through life insurance. And just like anybody else, while I was a bellman down at the Marriott, I was distracted. I was in college at that time. I didn't care too much. I failed my test like 3 times, I think, before I actually passed it. I think I was, something was going on. It was a Super Bowl, something like that. I think I finally was studying around that time. And sometime around, I finally passed it. I think by like 3 or 4 points. But I didn't care. I was like in school and I was working. But I'm glad I did do that because of all the longevity now. And then that's when I started opening up different corporations at the time, different LLCs, before I started 501c3 in 2008, and then a C6 in 2015, so we get into that. So I opened up Divine Insurance Group, I think in 2008, somewhere around there. And I started training everyone. It was no training in really any Medicare, it was no training space that they had at that time. It was like I had 70 agents at the time in Philly. We were just writing a ton of business and everybody's acquiring everybody. I'm like, why are these companies buying everybody? But I didn't understand the business side of insurance at that time, why they were buying each other. Okay. I started learning. All I learned was the agent perspective, the agent way. And at that time, I was fumbling to bad agency agreements and bad contracts. I know we're going to talk about, because the whole purpose of us as being transparent is to avoid those traps in these contracts, because you're green and you're going in so you can acquire wealth for yourself. You can own that book of business. Again, like Cadillac Records, you want to own your publishing, right? Michael Jackson, Prince, James Brown. A lot of people had these bad experiences, with contracts, of using all your sweat equity and they stealing it. So I definitely want to tap into that today. And I opened up a Certified Final Expense Advisors Association. Before I changed it, I got a cease and desist. I had to change it because of the letters that came up with somebody else's letters. So I changed it to the Final Expense Plan Special Association. And that was a membership driven 501c6. And we were collecting, revenues off of that. Was a designation. How I got that designation, I was sitting in Artledge in Cambridge at Harvard Business School. At class, I was talking to Professor Yaffe. I remember this. And I was like, what should we do? I was going to do one for mortgage protection. But at the time, we did one for final expense, because at that time, it was no designation for final expense. And as I was helping create that, I got with 2 other partners. I named it at that time because I still have it in my book. So if anybody says that I don't have it, no, I still have it in my book. I still have my articles. I named it because I wrote it down. Okay. In the cafeteria in Artledge. We noticed the cafeteria where I named it. I put it in my book. And that went viral because hundreds of agents were getting their memberships. We were trying to make that, there was a lot of testing I had to do to become accredited. So I was still trying to work on that. And, but COVID hit. I kind of had to knock that out, get rid of a partner, and I had another partner that had been with me for 15 years. And she's like a mother to me. And a lot of agents have been with me that long, over a decade or more, because of the integrity that I hold. And plus, I don't like, a lot of ambiguity type of contracts. I read them. I understand what's going on, a lot of traps. And a lot of agents respect that, that, hey, I'm not just some mouse going to see that cheese on that trap and get clipped. We got to know the ball game around that. So this way we can still own our equity inside of that. So make a long story short, then we came out with RetireEduConnect because of AI and everything that started coming out. And with RetireEduConnect, that was an S Corp. Because the model, which you saw, Tyson, too, and this is years ago, we didn't catch this model, but they were building corps, because a lot of people just get the small baby, LLCs or whatever, and they want to build business credit with that. But the S Corps and the C Corps, so the S turning into C, they were just crowdfunding. They were doing register. They would come in. Anyway, they were just going public. They had venture capital, to look at them, and they were putting people in these agency agreements where they were doing LOAs, where basically own your book of business, and these agencies were paying you so they could go public. And that was the game. Mm-hmm. And a lot of these other IMOs started picking that up too, started putting these models together, but they wasn't bringing anything to the table like leads or anything else, Mm-hmm. And I just got sick and tired of that. I said, you know what? We got to go on podcasts. We got to do something. We got to get this out here so people can start owning their book of business. Okay. And stop walking away from it, and putting all this equity into some other firm, some other people who don't look like you, and taking it overseas somewhere, and they're going public. And you're up there like, well, I'm gonna get some equity in the company. What equity are you going to get at 0.04? You're not getting anything. That's your comp plan. You start at 40, 50, 60% comps. And I got so sick of that in life insurance side. I said, why are they start lowballing these people? They want them to come in dumb, to come in because they don't know, split it with their upline. You don't have to do none of that. Retire EDU is the solution for that. And why we created it, because of all of the background components with AI behind that S Corp, because that's an S Corp that wrote up the business plan. The bots wrote the plan. The bots actually wrote Retire EDU, named it that, so it could connect to other bots that are out there to build it, to make it go public. Even got a deadline of how to hit it, when to go hit it. Because right now you can go on ChatGPT and say how to take a S Corp or C Corp public right now. It'll write it up for you. Okay. All the steps. So nothing's hit no more. So now it's more transparent now. That's why I started creating these entities, right now, and said, let's get this word out here to the masses that we can get out here so we can help, our insurance agents that are out here so we can massively group up, because everyone's a lot of people are divided. They're in the old model right now of praise recruiting. So I'm here to talk a lot about that. Today I look forward to that. And again, I look forward to discussing all that, today on our podcast.
Awesome. Ladies and gentlemen, you guys heard of Billy Blanks, like he works you out, he gets you in shape. This is Billy Bundles right here to my left. That's what I gave him the name. He goes in, he bundles stuff. We're going to deal with Tyson, in a little bit. He going to get you into shape and, train you, and it may help you knock out some financial stuff. But interesting, you talked about privateness. So in the podcast, we have that word P, principle and principles, right? So the principle is what insurance is for. The principles are what guides us as people. The principle is who owns it, where the money comes from, how you're going to get your principal back when you pay on interest. We also want to talk about the private companies, right?
Yeah, of course.
We also want to talk about some of the public companies. So we've covered some of the P in that. So now I'm going to head over. And I was a bellman too, so we kind of came from that same finances. He's my younger brother, but I'm a little upset. I probably didn't get in a little sooner because all of my money comes as a result of me producing my own produce. He has many, many, many agents, and I am looking to, in the process of getting my license, to work with him. I've been supporting him for a while, for the past couple of years, trying to recruit and show up and going and learning. So I am ready to move on to the next phase of being in this insurance industry because of residuals, because of passive incomes, because of his relationships. So I truly appreciate you, younger brother. I wish he would have taught me about this earlier, but it's all right. I love him. I should have come earlier. I'm just kidding, y'all. We love each other. All right, over to you, Mr. Tyson. Please tell us Tyson Price.
Right. Well, great to be here. Been a friend of Bill Fagan's and for a number of years. I named my company as a Global Financial Group, Global Capital Group. I've been in the insurance business now for 30 years.
Okay.
And, met Bill almost 20 years ago and, met you, Brian, almost 10, 20 years ago, when I was younger, I was very intrigued about the way in which money worked, why the wealthy became wealthy. Why is it that those were in marginalized communities seem not to be able to succeed in life, and just to better understand, how money worked, the mechanism behind money, So I got my insurance financial service license. I started off as a street vendor at Broad and Airy, and answered an ad to get my insurance license. And I went to my first insurance convention, and I just said, wow, there's a tale of two cities. There's a tale of two trainings, there's a tale of two informations that's out here in the world. And that's when I began to really, really start to, go to Wall Street and train and become better educated. And I got my license to share and teach and educate and train our community about wealth, preservation of wealth, creating an estate, passing down wealth to another generation of our community. And with that, found that there was two ways in which people understood money, right? And you start talking about generational wealth, especially say in the African-American community, I started to realize that it was a lot of information that we never received.
Yeah.
That's true. We never received. And, meeting Bill, we partnered up to bring cutting edge technology, cutting edge information. I also began to realize that the way in which financial services is done is that there's a lot of financial engineering. If you start looking at the statistics, you start looking at the poverty rate, you start looking at how much wealth is transferred, when you start looking at how many of us are able to go to college education. But then there's an entrepreneurial side. Yeah. I began to understand, from an agent perspective, how come some agents became very wealthy and some agents did not? My passion also was to help empower insurance agents, all of us, to actually build wealth ourselves and understand the business of insurance. As Bill said, I think that when you look at what's happened in all various industries, if you look at what's happened in the entertainment business, where it took maybe almost till the 1980s and 90s for, the African American community to understand about owning your publishing, owning your
Yeah.
book of business, right?
Right.
Getting a distribution deal. Well, I started to say, wait a minute, what's happening in financial services? Do we
Yeah.
own our book of business?
Right.
What about our trails? What about our residuals? What about our commissions, right? Is it our book of business? Are we vested?
Right.
And I began to realize that we were not getting that other side of the business story as well. So I'm here to support Bill, and we're going to have a great conversation today.
You mentioned some pretty powerful words in here, so we're not done with the P word yet.
Mhm.
You mentioned protection and preservation, and those are a lot of the things that sometimes we're not taught in the inner city.
Right.
Being Black, even though we look like the remix of the Elder Barge, I don't know who you are.
Don't go down that path.
You're Bobby.
Yeah.
You're the older DeBarge.
I don't know.
Who would I be? I would be L.
You be L.
I'll be L. I'm Swell DeBarge, and this is Chico DeBarge. 3 light-skinned brothers on the couch podcast. We've been tricking y'all this whole time. We're not really talking about insurance.
We're talking about battle of the sexes. No.
Yeah, we've been tricking y'all the whole time. We're literally trying to rebirth, the barge.
Yeah.
Right.
Through life insurance.
But you mentioned something that was pretty powerful. You mentioned perspective, you mentioned protection, and you mentioned preservation. And a lot of times in our communities, we don't understand that principle of protecting our assets, right? Preservation is how we transfer wealth, right? And also the perspective that, hey, insurance is a cost. No, insurance is like a savings account that you put money into that you can access at a later date. So I truly appreciate you sharing that.
Yeah.
I appreciate you being out here for 30 plus years in our community. It's not always easy trying to plant those seeds into our community. And we mentioned we want the Black Wall Street, and we want all of these things to be back together. And I had a stat when my son was 20. I have 2 children, and my son was in the womb. And I heard a stat. I was at a church down in Chester, and it says that the dollar stays in the Asian community 22 days out of 30, 19 days out of 30 for the Jewish community, 15 days out of 30 for the white community, 11 days out of 30 for the Spanish community. And at that time, it was only 4 hours and 42 minutes in the Black community.
Yep.
So if we don't understand the principle, the perspective, the protection, right? The provision, and also the principles, because once again, principle means money, it means investor, but principles also means the character of something, of why it was created, the originality or the precepts. So I'm glad you were able to bring that into the atmosphere about that protection side. So we have to be more protective. Next, we're going to move on to the O in podcast. We're going to talk about the opportunities. So opportunities, they're presented to us. Opportunities are mentioned. There's always opportunities. There's so many opportunities. How would you say that your opportunity, what you have, RetireEduConnect,
Right.
how does your opportunity move to the forefront of people's brains? So give me some of that. Just what the opportunity that you have.
So
why people should join.
Should join. Yeah.
RetireEduConnect.
If I could back up, right? If I was an agent and I'm watching this for the first time and I'm like, hey, I have my insurance license. I don't know what to do. A lot of the market right now has been tapped through old marketing, mailers in the mail, most final expense. The most lucrative right now will be final expense and bundling it with Medicare, but it's teaching that. So if I was a green agent or I had bad experience, maybe a couple years, I would start off and get with an independent marketing organization. Okay. I would make sure that I don't have any agency agreement. Okay. This is just to protect you. I know we're going to get to direct and contracts, but we have to make sure of this first, is because you don't want to give your book away. Okay. that because they want you to recruit, and they want your mom, they want your friends and family first, and they're not the best people
Warm
to get
market.
anyway.
Yeah.
They want warm markets. All your warm markets get like me. I have a lot of influence, so I can have a warm market because I can talk to a lot of very successful people and bring them into different network groups or different opportunities or whatever. But if you're just starting off and you somebody that's just getting their
like me.
license. Yeah, well,
I'm in
then
the process.
you may not have the best influence. You may have some negative circles. You might be in the hood or something like that. So you don't want to bring that book, and they're teaching that. So this is how I would do the opportunity. I would say, let me get with an independent marketing organization where I can have a direct carrier contract. Okay, I don't really want to do any agency contracts unless a carrier requires it. Like in Medicare, sometimes Blue Cross, you got to get paid by the FMO. That might be different only because the carrier wants to pay one source. But the rest of them, you want to be paid direct. Okay. So I make sure that my contracts are direct pay, direct from the carrier, and there's no agency agreement with me. Okay. When I bring in an opportunity for leads, I want to use the most current system that's possible. That's automation, that's AI. Okay. And I want to talk more about the opportunity because right now, if we go back to the final expense side of the house, right? Most people are coming in, do family and friends. Hey, Tyson, I got this great opportunity, man. They got some leads. You can make $500 a day, $1,000 a day. Okay. And you might be able to make that, but there's a caveat to all of that. Okay. The problem with that is, and let's put on my marketing hat. My background's in marketing anyway. If I was going to be an actuary for an insurance company, I will come in for the best interest of the insurance company. So let's go insurance company. Okay. And this gets into opportunity. I would say, how can I develop a model, okay, a system where I always win? I never take a loss, okay, from insurance company. The first thing I want to do is I want to get a bunch of green agents, okay, to represent just one company. I'm going to tell them in the contract that they're not captive, but they are. We don't want them to compete with any other company out there, okay? What I want to do as an actuary is give and make agency directors, okay, and give them their own contract and give them the power to hire and fire, which is the worst thing you can ever happen. Because I can't just terminate somebody, okay, with a direct contract. They'll just move you to another IMO and you still get those residuals. But me, if I have a contract, okay, with a carrier that says this agency head right here is responsible for you, that agency head, Tyson, can just fire me because he don't like the way my boots are, okay? Any day that he wants. You're not buying leads. Buying leads from who? If the carrier is providing leads, then I would make sure that in the contract you have to buy our leads. Why? Because it's in the algorithm, it's in their system, it's in their actuary system. So because if you're buying leads, right? And you say, Dag, I need some leads. I say, all right, I'm your agency head. You need to spend $800 to buy these leads. Okay. After they keep marketing these leads, eventually the returns come back bad. They start recycling leads. They're making a profit off the leads. You're like, no, they're not. Well, let's just go out somewhere else in some sundown town somewhere. Why would I go out there? The inner city is the most miseducated place to be at for final expense, period. There's nowhere else to go but to educate here, okay, to move up. If you educate enough people and you have enough marketing skill sets, you'll be able to present the right way to keep that, to keep that book and keep that going. So now I created a lead system where I win. Then what happens is after you burn out your book of business, Brian, okay, it didn't work. Or you're chasing all these leads. You're burning your car up. Okay. You're burning your mileage up. All this sweat equity. You're jumping on a million Zooms to keep you plugged into this juice. You're drinking this juice. Okay. You're trial and foul on one person. Okay. That even a monkey can give a territory. I was never given a territory. Not that there's nothing wrong with that. I'm not knocking nobody here that is wrong with if somebody give you a territory, you work for it, you earn it. But if it's just going to be final expense, I cannot morally just sell one product to everybody, to children, to adults like you. Why would I sell only a $25,000, maybe up to $50,000 policy, knowing that you as an entrepreneur, you probably need an index universal life insurance policy. You want the Rolls Royce of insurance. Why would I give you the worst type? Why would I sell that? Bad training. Because you're so stuck on, I want to be praised. I want to do 10,000 this month, but you had a bad contract, 50%, 60% contract, and the agency head in that state, you're never going to reach his contract. You're stuck. So you have a ceiling. So that's bad right there. So now you got a ceiling. You're trying to chase it to get it. You can only go wide when recruiting. You might be capped at 80. Okay. You're getting praised based on titles. Sometimes they'll title you up, praise with titles, oh, you got executive this, you have this, oh, you jump on this call, you're training, you're doing the meeting. At the same time, that carrier is making all this money. All right, Brian, they're making a fortune. They're making a fortune off the leads. You don't own the book of business. What I mean, they don't own the book of business because it's in a contract that that's their clients. The reason why they want you to use those leads is because they own those clients. So they can keep calling your clients and selling them other services. They either upgrading their coverage. They can go around you on that. Okay, sell them to somebody else. They terminate you. They'll resell those leads and make a profit off it. They'll try to sell them dental, vision, and hearing plans, right behind your back, which means they're going to go back in their bank account. This becomes a racket now because now they're going back in your bank account, taking things. These people have medical assistance. They got Medicare. They have dental, vision, and hearing. They get Advantage plans to get dental, vision, and hearing. Then they don't want you to sell an Advantage plan to the same client that you should come back and see because the best residuals, renewals are in Medicare, period, in our industry. It's Medicare because you can get an allotment of money, okay, at one time. So the life insurance is lower. So now back to me being an insurance marketer, that has the algorithm.
And why the opportunity is for the client. You also mentioned something that was pretty important. So it just came to my mind. It's either opportunity or opportunist. As you stated, some people will help themselves to you by leverage. And ladies and gentlemen, there's nothing wrong with leverage except for when you don't have any. So that's what we're trying to talk about. We're talking about creating leverage for yourself where you're not, you're not captive.
Let me finish because, when we're getting advanced commissions, these are loans, okay? So what's happening is there's no teaching on the business side of insurance, okay? Understand that these are loans. You're like, I'm going to get $500 per day. It goes back to that same argument, but that's a loan. Okay, they need to at least pay that off, at least for 9 months. If they loan you 9 months, which is 9 months advance. Or 0.75, percent, then what you're doing is you're taking a loan. The other 25%, okay, they might pay that. They might divide that into 12 and call that a pay through. Okay, jeez, it is to follow you. Okay, but what's happening is that monthly check reminds you of the same monthly checks that our clients are getting and that same mindset of that, okay? Because see, somebody at a higher commission and another thing that they do too, I'm gonna make sure that because the way I build my contract, let me just go into it. The way I build my contract for the agents, that I'm gonna make sure that that the premiums that we try to set up for our clients are the highest because we're taking a lot of risks. Then we're being cheap because we don't want to take people through the Medical Information Bureau, which means that we don't want to run them to see if they actually qualify. Because as a field underwriter, you're out there trying to qualify. And let's say Tyson might have some conditions he ain't telling us. Or you see some specials he ain't telling us. If you just write a policy on me and I turn it in, it's really not good because they didn't check the MIB yet until you die in the first 2 years. We still have 2 years to contest it. And they'll say, we pay claims in 24 hours. Okay, everybody can pay approved claim in 24 hours. They should be wiring it now. Okay, it's not old school sending you a check. They should be doing that, but it has to be approved, not as soon as they die. When a client, they don't tell you the game. The insurance commissioners know, they have actuaries there that they know in the first 2 years, they can look at the companies right now. You can go to the insurance commission and say, can you pull the name of my company? Okay. In the first 2 years of contestability, how many claims have been paid by this company? I bet you it's less than 50%. I guarantee it. That denials, I bet you, is over 50%. You know why? They didn't check the Medical Information Bureau at first, right? And then I'm dealing with carriers who will check it first. So if they die within that week, as long as that policy is paid, that first premium, they're going to pay the claim. Why? Because they went through underwriting. Now, of course, they're going to go back and look for things too the first 2 years, but usually they'll end up paying that claim. What I'm tired of seeing is that people are going around saying, hey, we have this small life insurance policy. I'm guessing that the cost of a traditional funeral is $15,000 right now. You didn't call no funeral home. You didn't do anything. And you're not educating them about what happens at death. You're not educating them. We have a service that you could call and it's going to price lock a casket. You can't price lock a casket. The cost of those goods and services can go up with inflation. So you can't lock it in unless you're locking in the service. Okay. Which is called pre-need. But because you can lock in a service and you might be able to lock into some caskets, or they might give you an allowance, but we're going to get into that too. But the opportunity, the reason why I'm saying this is because the I'm getting tired of the abuse that I'm seeing out here with agents who are running into this rat race, okay, of buying leads, $800, they're burning themselves out, they're going out of different counties they do not need to be in, they're trying to write 10,000 at 60% contract, right? So you're thinking if you're gonna get $6,000, well, you're only gonna get a third, 2/3 of it up front, because the rest of it, is still a tail that comes behind you, right? You probably spent all this money in lead debt, okay? You can only get a certain amount of commission in a house, by the way. It might be $800,000. That's not right, okay? Because you might insure a bunch of people in a home, and you might walk out with a couple grand for a couple policies, not $800. So they're capping, trying to protect themselves. So the only interest really is the insurance company to make money, okay? And the agency head that's running that state, okay, like the state person, they're just thinking of, can I do $1 million a month in production? Because I'm thinking about a spread of 20%. Well, if I can do that and I got them all, let's say I'm at a 120 or something like that, and I got everybody capped at 100, I'm getting 20% off of all of that. So of course I'm gonna stay loyal to that company because they're putting everybody under me. I mean, you can train a monkey to do this, okay? I'm from the streets of the hard knock. No one's gave me anything. I'm a door canvasser, knock on door, and have a different product.
Definitely
I'm going to sell by price and budget. I'm also going to sell services that they need, like a will, living will, and power of attorney, because the value proposition is way better than what you're offering. I'm going to go in a home and I'm going to educate my clients about how insurance works, how death works, how if the medical examiner works, if you were to die, how that funeral home needs to go in there and sign off next to kin and transfer that body over, how we get the death certificate, why is it in red, why we shouldn't be assigning over life insurance policies over to a funeral director for at need, at time, at needed service right now. Okay, what's the difference of pre-need and what's the difference of life insurances for legacy? Pre-needs to pay the funeral off. And you're supposed to go in there, if you're going in there with that much knowledge and you had 100% contract, most of our clients have a lot of comorbidities, congestive heart disease, bad diets, everything else, right? I need to get them first day coverage that's run through a MIB, okay, through a medical information bureau. So they're protected day one and they got coverage. And the reason why I'm bringing AI into it, because right now in 2025, the new wave that's going on right now, especially in final expense, is that people can get approved now in 10 minutes now, okay, very quickly through Nexus in 10 minutes. And then they can get a value prop, which should be like a will, living will, or a power of attorney right now. And they can add that and we can educate them on that. That's going to help keep that policy sustained, because we also want to take it out of their Social Security. See, you know how to protect the agent, but I maintain that book of business and it's going to stay on the books as long as possible. And then I want to come back and bundle them again if they're on Medicare and get another policy out of it. I might want to hit the family. That's how we train at RetireEDU. Well, Divine Insurance Group is for the final expense and Medicare side, but that's how you want a leader to train you, where it's the best interest of the client and it's the service of client is the best interest of the agent. So this way they can keep their book of business. That's why people been with me for 15 years.
And so how many agents have you had that trusted you for an opportunity over time? If you can give us maybe just a roundabout. I've been around, you're my brother, so I know. I've been around a long time. I've seen a lot of agents come and go. Some are opportunists, right? Some of those ones. So that's why I get involved because I think he's a little too nice with some people. He'll let everybody in. He's petting stray dogs. We need produce around here. And we're looking to protect people with insurance because this is a vehicle that allows us to be able to do very well. Myself, I haven't worked since last November, maybe February, because I'm on the claim side of things, being an insurance adjuster in Pennsylvania, New Jersey. I sell some property and casualty, but also doing storm claims out in Minnesota. I did $1 million worth of claims in maybe 8 weeks, and insurance pays. Like when we had our word on word, we had our radio show on WRD a couple years ago. It was wealth underwriting, reporting, depositing. We were educating people about insurance, but the opportunity exists in people that have the principle, because this industry will allow you to create leverage. I know yesterday you were just down in Maryland doing some stuff, and Tyson was up in New York. So the opportunity is there. You said a lot. Also, he trains well. He has great relationships. I've been to WellCare meetings with you, Cigna meetings,
Right.
Blue Cross and Blue Shield. Have I missed any? Just this
I
year,
can get into
traveling with
a
you.
little bit more to the opportunity. The point is automation and AI. Okay, this because we're going into 2025. Okay, and I was just
And
talking
grassroots
about
marketing too, like
Yeah.
knocking doors, because that's what I think you're very, very good at. From watching you all these years, he just doesn't stop. He's always marketing. He's always recruiting. He's always out. He's always presenting the opportunity. So I was trying to hone in on why somebody should come.
Yeah, well, I was just honing in only on the final expense opportunity side. I
Yep.
wasn't even honing in on the retirement side. I mean, we're talking about RetireEduConnect. That's the IUL's annuity side of it, and there's a marketing component too with AI. But I was getting on the final expense side that those models that I was just talking about are irrelevant right now. It's just for the MGA, or it's just for that person to say, oh, I made the most money I've ever made in my life. Of course, if I get Johnny Blue down the street, up here, he gets his license, he got a 50% contract, you get a couple of checks. Yeah, it's more than what he's making at the Bell stand. Yes, of course, but he doesn't know the game yet. Okay. So if you have somebody like me to kind of educate him against, no, get these flagship carriers. So you're direct, you have a direct contract. Don't worry, we have leads. We'll teach you what is called alternative marketing solutions. What is that? How to do church presentations, how to do a high-rise building. Any high-rise right now here in Philly, okay? I could call the property manager up, tell him I want to do a Chick-fil-A. They send him a flyer, okay?
Don't give out all your secrets.
No, listen, it's not that. But and I know,
but he trains his agents on this stuff, because I know other
see
agents
it on my YouTube page, right? They can go to my YouTube, go to Divine Insurance Group, and go to my YouTube page and go to my shorts and watch it. It'll blow you away, okay? Because I'm using tactics, in the inner city that will bring people down for me to do a survey on them to find out what they have. And most of the time they have predatory life insurance. These are policies that came in the mail, over the phone, or it's too expensive, or they didn't pass the MIB the first time it went in. So I'm a type guy that I can go behind you. Let me see a life insurance policy, Mrs. Jones. Okay. This is predatory. Why? Let me call up, be your grandson, and show you why this ends at age 80, or you bought this in the mail, or it's a graded policy, or they paid at the minimum, because they're selling bad UL policies. People out here, they know what I'm talking about. So you can oversell that, but I'm not going to sell it under some agency that's paying me. I'm not going to do that. So my model for Retire to You is to get directly contracted. So you own the business. That's your client. We teach you the proper way to market and how to sell it. So you're selling with service and education. They don't hear commission breath out of my mouth.
Service and education.
They are only service and education. Yeah. And so if I were to follow somebody and people say, you know what, I want to get with Divine Insurance Group side because I want to learn that final expense side is very lucrative, but I've been burnt out. I've been abused. People fired me. I got this vector on me right now. And again, it goes back to me put my marketing hat on. Again, if I had the algorithm and I was an actuary for an insurance company, they have them for brokers. For agents. I could never be an agent because they'll say, oh, you're a life insurance agent. No, not me, because agent means I'm tied under an agency agreement. I'm not tied under no agency agreement at all. I'd rather be a broker and I'm tied directly to the carrier. No one can turn me. But the carrier four calls in their policy, not for without calls, because I don't like the way Tyson's shoes are, and that happens a lot. And they're still their book. Okay. The commissions can roll up. Yeah. They can put them into vector jail. That's insurance jail. It's called Vector One.
Jail?
I call it vector jail because what happens is they'll put you in it if you owe any debt. Remember, these are loans. Okay. So if they fire you and you still were receiving some money from some loans that haven't been, the clients haven't been paying them off, then they'll vector you so you can't get contracted with other carriers. This is the game. The insurance
to your
companies,
credit, right?
No, it doesn't. Credit. It affects your ability to get contracted with other carriers. Because one thing is when you get contracted, they want to know, do you owe any debts to other insurance companies?
So for a new guy like me, so you're saying a vector is kind of like on your credit, or it's a strike against you?
It's a credit bureau for the insurance companies to strike against you from they all pay a vendor fee to be inside the Vector One. So they don't want agents. There's some bad apples. Some agents out here bringing in $5,000 of debt from some other company because they may have wrote a lot of bad business.
Okay.
Sometimes it could be your fault. Sometimes it's not your fault. Sometimes somebody could just terminate you. Okay, because you wasn't participating on a Monday call or some BS. We got to stop that. But see, they don't know where to start. And when you don't know, you don't know. So you don't know where to start when you're coming into insurance game, So your opportunity, because I'm going to move on to the next one. We're going to talk about direct, but we're also going to talk about delay
depose, and defend. We're going to get into that. Tyson just came from New York, so we're going to talk about that. But you stated that in your opportunity, you're looking for, in one sentence, newbies, or you're looking for experienced people? What are you looking for?
I'm really looking for people that had a bad experience right now. Okay. They've been abused. All right. That means that they're in some agency agreement, or they're in some final, or they're captive. Okay. This is your chance to have freedom. Everything's transparent. Everything's automated. You can find the truth. They're just not reading their contracts or these agency agreements. They're getting tied up because people want money. They need money. They need leads. They need this. They need new customers. And they need to be taught, trained, and then they need a marketing system. They don't get that. So if you tag into some other agency's marketing system, they own it. So with my opportunity is to say, okay, what are you currently doing? Well, I'm big in final expense. Okay, great. So what we can do is if you're big in final expense and you're writing a lot of business, maybe this is your opportunity right now to be financially, real financially free without being in a contract right now. Tied into some agency agreement, which most likely they tied into. And this is a time where they could come in and say, okay, I have a book of business. I have clients I can service. I'm gonna get a better contract, higher contract. I could keep all of my commissions. I keep my clients. I could get them into a value prop of services is better, like a will, living will, and power of attorney. Okay. I can do the MIB up front first. I'm servicing the clients now. I'm learning these marketing tactics, like we talked about the Chick-fil-A days, or we talked about the Wawa Hoagie days. We talked about these different ways of getting people to come to do a presentation. If I teach this and I also bundle it, okay, with other products that they like, when you see a senior, that's final expense and Medicare. Why are you not doing both? Why don't you have your own LLC if you're making good money? Okay, they don't want to empower you for this. You can't go to Zen Business and get a free LLC created and built and add a insurance license to it. You could do that all day. So many guys don't think Devon or RetireEdu doesn't have an insurance license. It does. You can make multiple entities. They don't even know the game yet. The game is that you're supposed to have multiple LLCs and businesses, okay, and establish some bank and get business credit. I'm not buying. I use my American Express to buy leads when I was buying leads because I get points, so I can fly. I can do things. We're not teaching no financial literacy, but everybody will talk about financial literacy.
So 20 years in, are you still buying leads?
No. I buy leads for agents.
Okay.
Okay, we have a lead platform, but the book of business that I created, I don't have to buy any leads anymore. But if I were to buy leads, they're going to be, because AI right now don't really have to buy leads. Right now, we just put them, out there on social media. Leads are coming from social media. Leads are coming from funnels right now. Leads are coming from educated visual funnels right now that are capturing people right now, 2025. So this way they can be educated. They can do a financial needs analysis. We know what they're looking for. Okay. And now we can illustrate, and then we can get them a policy. This is without me saying, hey, Tyson, I want to split this 40%, 50% contract with you. Okay. The agency is going to pay us, which is even worse. You put yourself down as agent of record on it. Why would I do something like that? The dumbest thing.
And just to chime in, Bill, we're going to talk about the summit at some point.
Right.
But one of the things is that in our career, we've seen some financial service, some of the best and brightest multi-million-dollar earners and producers in the insurance business, and they have nothing to show for it.
Yeah.
Many of us who've been in the field, many of us who'll be listening to this conversation, you're out there writing business, taking care of yourself, taking care of your family, producing hard, doing meetings, presentations, driving for miles, only to find out that you didn't own your book of business, only to find out that the insurance carrier could term your contract. And we've heard many, many stories of individuals, horror stories, and many of may listen to this and know others. So, with Bill and I and Brian, what we are joining forces on is to educate the insurance agent on how to have a practice, how to have a real business, start their own agency, control their branding. Your clients trust, know and like and love and trust you. The insurance, they don't know the insurance carrier. They know you, the agent. And it's our job and our responsibility to try to pick and choose the best option for that specific client.
Right.
The problem is that, one of the problems is that on the insurance agency side, right, many of us have been out here building wealth for agencies
Right.
and IMOs and FMOs, right? Only to help their EBITDA and help their book of business, and they turn around and sell their multi-million-dollar book of business that you've many agents have created,
Right.
and then at the end we have nothing to show for it. So what Bill is saying is how to properly position yourself as the expert in your community. You know, how to position yourself as a service-oriented provider and build a real agency for your clients who trust you, right? So if you know you're in a home stalling final expense, but you find out, hey, wait a minute, you know, that client has other needs, other services. Their family members have other needs and services, wills, estates, trusts, all those other types of
Right.
things. We're in a position in financial services and insurance agent to really turn the tide on what's happening in our community. I think they said by 2030 or 2035, the African American community actual net worth will be almost at zero. Think about that for a second.
I want to say this on this one, right?
Yeah.
Because now that we're talking about businesses and opportunity,
Yeah.
and I know we're still there and
Yeah.
direct contracts and stuff. If I had to start all over again,
Mhm.
right, I will want somebody to teach me, okay, how to incorporate an LLC, how to
Right.
brand myself, what Tyson was just saying,
Yeah.
okay? And the first thing I want them to do is teach me the banking, okay?
Right.
I need business credit. I need
Right.
access to capital, okay? I'm going to make sure I have good personal credit. I can get to a bank, okay? I know where they pull from. I make sure my corporation is properly structured, that it's bankable, okay? And then I could get 25,000 no doc, you know, business lines of credit, okay? Credit card and some lines of credit. You do that a couple of times till you have $150,000, $250,000, okay? You ain't have to rob no bank to do
Right.
that, okay? Why are we not taught that? First thing, cash flow is what's needed. Insurance agencies are cash flow, okay? That means now I need clients, okay? And I need a sizzle product, okay? I need something that nobody has, okay? That came out. I need something that's quick. I can get them approved right away, maybe in 10 minutes. I need a sizzle like a will living will power of attorney because they don't have it, they can't afford it, and not paying for it. And I need to educate and service them, okay? That beats everybody else. Plus the prices are cheaper. And I need something I know it's going to pay out because my integrity is on the line.
That's right.
So I have all of those components, right? I need to know how to pivot into helping them get Medicare Advantage plans, okay? And this is just, we're talking about elderly, we're just talking about seniors. We ain't talking about us yet.
Right.
When we get to Retire EDU, I want to talk about that financial literacy, you know, and also another things that we should have. But right now, if I was in the senior community, that's how I would pivot. A couple of carriers, direct pay, top contracts, 100% or something like that. You know, when I get those loans, they're not falling off the books. I know the game. I know to get them in the Social Security billing. We're going to their checking accounts anyway. I want to draft that money before they even get their money, okay?
Right.
I want to educate them on the purpose of the insurance. And I need somebody to explain how can I really get into what they're currently paying. Because they're like, well, what about the chargebacks? Well, what do they currently have right now? What is your life insurance, Ms. Jones, that you have currently right now? You paying $40, $50 a month? I'm keeping it there. If you've been paying that for years,
Yes, sir.
I'm not telling people to, you know, drop their coverage unless it's bad, unless it's graded, unless it's something like that. And I can give them first day. If it's graded and I give them first day, I did them a service now. That means I did a good thing. Graded means they are 2-year wait. Usually the prices are higher. If I give them first day, you get rid of that. You let that thing just collapse. Once you get them approved first, you just let that lapse. In America, you have the right to buy as many insurance policies as you want. If anybody tells you this is the only one you need, that's garbage. They just lied to you again. No transparency. Okay? Because they'll say, oh, this is the only one you should have. No. They might say, oh, well, this is going to help pay for your funeral. Did you set up a funeral expense? What funeral home are they going to? Did they do a last will and testament? Did they do an estate plan? So they're not really there. They're there to hurry up 40 minutes and get a sale, get out of there, write $10,000 a month in production and say, I did this. And they want praise. They want recruiting, want recognition. That is the slave way of recruiting mindset that the insurance companies, some of them have built. And you running around, you know, super liberal and all this other stuff. And they got super packed GOPs, these insurance companies have. And you running around, going around saying, I'm liberal and all this. No, you're not. The insurance companies you working for is all capitalists, 1000%. So you're running around, they can term you. They don't vote the way you think. They don't think the way you think. Okay. They're using all your sweat equity to take it from you. They'll put somebody ahead up front that look like you, that gives the appearance that he or she's making all the money. You praise and worshiping this one person, okay, that they can do, and you can do it on your own. I just told you the whole setup. Be bankable, have business. You'll have more money just with lines of credit than the people probably in all over the room.
And that's the thing too, Bill. You know, we've talked over the years, and what we want to be able to do is actually educate and teach the agent to build wealth properly for themselves and their family, but also the agent. It's important the agent understands that as an agent, our wealth and prosperity is also tied directly to our clients. So if you service your clients well, the business stays on the books, you have a relationship with your clients, then at the same time, simultaneously, you're structuring your business properly, right?
Right.
LLC, the cash flow that comes into your business. You have a business.
Right.
You're just not an agent. That's what we want financial service providers to understand, and a lot of financial service agents to understand. And you know, there's all kind of, I call them the insurance acronyms. There's all different kind of acronyms out here.
Brian's good at this.
with different insurance companies. Or are you with this group? Are you with that group?
Right.
You know, different firms and what have you. And you know, there's only but so many insurance carriers out here in the United States. So most times, most agents, we're going from IMO to agency with a reshuffled contract. We're not building any wealth for ourselves or our family, and no one's actually teaching us.
No one's teaching the business side.
Nobody's teaching the business side. Nobody's really teaching the game, and that's where the evolution of where I'm at. You know, where we're at our career is when we start educating and when we educate our agents, we want people to understand that, listen, if you have to structure things properly, but no one taught me the business of insurance.
Right.
They just taught me. I had to learn through trial and error just to be a good agent.
Right. Agent. Right.
Right. While they were doing stock IPOs and monetizing, you know, their organizations on Wall Street and selling books of business and becoming billionaires.
Correct.
Right. They had us down here in the field just being a great agent, just getting some insurance production. Maybe we might make a vacation or two, but that was just about the extent of it.
Already went because the agency made all the money.
Right.
Okay. Because where you're going at is where the agency model that I wanted to get to next. Because I only just talked about the senior model.
Right.
That agency model, it just kind of picked off in the last 5 years. All right. Let me break this down. So you have big companies like Lakeshore and BlackRock. They're starting to invest or private equity into smaller, they call national marketing organization, NMOs. Okay.
Right.
I'm called an IMO. So people don't even understand these tiers. Okay.
Right.
These big NMOs, they do hundreds of millions of dollars in premium. Okay. They usually have direct carrier contracts. Okay. You don't really hear about them. And usually an IMO be under them. An IMO like myself, I have thousands of agents. So those agents are out there. My responsibility is to teach them, or and train them and get them and do marketing for them. Okay. So if I have an NMO, most of those NMOs are bought now. They're trying to buy them and buy these books because you're considered a commodity. Let me tell you something. What I mean by commodity. See, they ain't teaching you this. Okay. They not. All right. So you two wake up on this, because you got a lot of people. I don't mind all the controversy, because Kanye West did a very good job on controversy because he markets off. Remember when he did that commercial he did on Super Bowl? Okay. He spent a couple million and made tens of millions of dollars off of it. Okay. That type of market I learned at school too. So I know how to do both sides, but I want to get into a little bit about that. And I know I'm sorry to cut you off, Brian, but the agency model right now, because of AI, you could find that model of how to take a company public. Okay. You could type that into ChatGPT. Okay. S Corp. Okay. That's why they're not LLCs. Most agencies are not LLCs. Okay. When I'm talking about the ones that want to go public, how they do it is, and please listen to me on this. They'll create an S Corp. Okay. They'll LOA the direct carrier. Okay. So they're paid all the money. They'll come up with a binary matrix. Okay. And they'll have equity inside of that as well. Okay. If they go public. Okay. It's very small. They'll set you up at a 40, 50, 60% based on how many recruits you get in, based on the amount of target premium you bring in to move you up. And they'll title you up, okay, based on praise recruiting terms and phrases of a title, okay. Well, you're executive chair, you're executive this, you did. No, the only real title is chief executive officer of your own company. There's no other title, okay. Because I can give somebody 80% contract and they're executive chairman of the universe. I'm like, who cares? First of all, I'm me. If I chose to have that model and run RetireEDU, yes, I'll make all the money. I can go to a regulation D. I can go get a title, agent. I can do the whole M1. I can go through the whole process to pre-IPO. Okay. crowdfund everything up, get the money up. And all of those agents are commodities, because a lot of companies do that. This agent right here is valued at, his book of business is $2 million. And he has a Series 6, 6.3 and stuff like that. So he's valued even more. We're stock to them. And then they'll say, well, we'll give you some stock options. And there's some crappy C or D stock. You can have your own S Corp and get a corporate book. And there's your 100 stock. Y'all got to know the game out here for real. Okay. They're getting rich, you know, off of our sweat equity. Really, really rich off of that. And you're sitting there on these lowball contracts, bringing in people who have 403Bs. Okay. These are all 401ks. These are IRS tax codes. These are teachers' pensions, 457Bs, federal, some nonprofits or whatever like that. And they're bringing them in, trying to get them IULs or whatever, because the teacher pension out there is broken. And if you go to RetireEdu, you guys can go to teacher pension and they'll educate you. I got videos. I have so much education on RetireEdu website that those bots created. Okay. So a consumer could look at it and say, that broke this down to me, to a science. Okay. I know I need an index universal life insurance policy, but I need somebody to articulate, teach it. We have funnels now. This is where the future of AI at, where it can teach you for 13 minutes. I'll give the agents the funnels and say, hey, use these funnels, educate. You don't have to split them up. Another thing is, why would I pay you? If I'm paying you, I own that market, that client, that book of business from the insurance company. So if a venture capital comes to me and say, oh, well, here's our block of business that we have 10 million, $50 million in premium circulating, you know, in our organization want to buy the book, you know, and the other agents, you just say, hey, we'll give you 0.4, but that's horrible. We'll give you nothing. We'll give it to you every 6 months. We'll give you some of our profit. What are you talking about? They had 150, 160% contract. You had a 60, they're getting 100% whop on you. Okay. So my thing is, you're paid pennies and they own it, and then they'll just fire you. You know, if I don't like you no more, you like, how do you fire me? I thought the company was paying me. No, the insurance company's not paying you. The agency's paying you. It's what you're writing. They own the book. They own the block. Okay. And you're in it like, well, if they go public, I may make something, and you might get and then sometimes it's crazy. They're not even giving you leads. If I get a 40, 50, 60% contract, leads are free. I'm not paying nobody. I got to pay somebody $100 a month or something. To who? Is it going in a personal bank account? Why? Well, we got some virtual assistants for you. Who? In the Philippines? AI's virtual assistants, they pay $0. We could get teacher data, emails, and all that. I remember, I give you guys some examples. I remember I was in this one outfit. It was a lie too. And they're like, oh, we get you teacher leads. I'm like, okay, cool. You know, I'm thinking that they have a procurement already with the state. Okay, that the actual insurance carrier would have a prime, right? And the subprime will come from the insurance broker firm that can market, you know, that prime contract, okay, for let's say some teachers maybe in this county or something like that, right? Nothing. It wasn't like that at all when I asked about it. I said, oh, so you're just emailing teachers, you know, a compliant email over to teachers using virtual assistants. How the heck? And at a 40% contract,
they charge you for that?
And you charging me $100 maybe a month or whatever, and then you don't get any and say, oh, you got to wait like 3 months. No,
so maybe I'm on the wrong. So maybe I'm on the wrong side of insurance. Yeah, I need to just be selling. All you gotta do is
yeah.
No, right. I'm not gonna lie about selling leads.
See that? Well, that's the game though, and people get caught up. So the real game is to get into some parochial schools or some charter schools or something like that. Set up a table and educate, and maybe you get some leads that way.
Don't give out all your secrets. Don't give out all your secrets.
So it's not that. I mean, that's why you come in and you learn on YouTube. We show it to you. We show you. Yeah, you know, that's the game.
And that's the thing too. One of the things I love about what Bill's doing now with the AI technology is that with the AI technology and the way we teach agents now is we teach agents to have their own self-contained business in the box, right? Where you're not dependent upon another company or another organization. The way in which the financial service, especially insurance, is designed is that you get a contract, then they'll turn around and almost make it obligatory, which is technically illegal, for you to buy a certain amount of leads. If you don't buy leads, right, they get upset when term of contract. But people understand is that then they turn around and charge you for the lead debt.
Yeah.
Right.
Right. And vector to you. They got vector 1, vector 2. Yeah. And they don't understand that they can charge you for the lead debt.
And then what happens is that all the existing book of business actually still sits as a written policy. So when that policy goes on the books, the insurance company and carriers actually, it still goes into their yearly balance book. So what happens is that this thing, hundreds of thousands of agents get churned every year. from agency to agency, from insurance carrier to insurance
The
carrier.
insurance companies don't lose.
And
They
they-
still got 80% of that book. Some
Yep,
fell off,
never
right? We know
lose.
that. They don't have to pay the clients back any of that money that was
Right.
paid out. Okay, so they know of that. Becomes a racket. They high ticket sell it because if they don't pay it after a couple of years, then they don't have to pay it to the client. Then they'll say, oh, well, we're profitable after 2-3 years. Okay, if I'm your chief financial officer, right? Man, it's banks' biggest Fidelity invested in the Bitcoin. Are you serious? They're investing right then and there, billions of dollars.
That's right.
Whoever's not investing right, and if you, or we're not going to make a profit for 2 or 3 years, stop lying. You're taking some of those premiums, okay, and you're supposed to be giving it to an institution that's creating wealth for you. They're doing that. How on earth are they saying they're not profitable, Tyson? After 2 years doing final expense at a small claim policy, right? Charging a price that's very high. The actuaries are getting to, well, no, that's not the same. Yes, you are. You're taking a certain percentage, if it's 10, 20% of those premiums, and you're investing it somewhere. But right now in crypto, they're killing it right now. So they're investing that money into crypto. They know those utility coins. They know what's going on right now. So they are making money. You're just racking it. You're taking it from the low income community. No, I'm being transparent here. You're taking it from the low income community. The agents don't know, they're green. They don't understand the game. We're teaching them right now, us three, the business side of insurance, which they don't understand. We're vets. We've been in this game too long.
That's right.
They're losing right now, okay, doing just the final expense way, and then the agency model way where the agency is controlling it because the agency wants to go public. And they do it all the time. They buy and sell agencies. Wall Street will buy and sell agencies. Everybody that owned that agency, all their shareholders made all this money. The agents that's below them made peanuts. They were just commodities to the new stock. That venture capital company bought that, sold it. They had an IPO. They went public now, and then everybody's paid.
Yeah, and the agents, a lot of times, agents are looked upon as a mini franchise. So when they do the business valuation, if a company has 100,000 agents, right, they look at those as distribution center.
Yeah, that's what I'm saying. Commodity, distribution
as a commodity. So your license is actually worth, a potential 100,000. So when they do their valuation over the next 2 to 3 years, and they want to monetize it on Wall Street, then they turn around and say, okay, well, we can evaluate your agency for, the $25 billion based off of whatever that valuation over time.
Yeah.
What we're saying is why don't we teach our agents how to, the business model? The other part that you mentioned too, Bill, is really important, is that if you do the math, financial service industries, is in business as a for-profit entity.
Right.
I settled into the banking industry, which was something that was really important for me to understand the way in which, the banks work, Wall Street work. That was really passion of mine. And just think about it. Say, for instance, not to mention any insurance companies' names, but just think if an insurance carrier brings in, they have 10,000 agents. They bring in 10,000 policies a month at $100.
Right.
That's $10 million a month, which is not a lot of money in the insurance business.
Right.
So if they had 100,000 agents, they hypothetically bringing in $100 million per month.
Correct.
Right. 100 million, that's $1.2 billion per year. Right. Only 1% or 2% actually may ever pay out a claim.
And that's going to segue us into our next.
Right. So that $1.2 billion, they take that, monetize it on Wall Street. They buy stocks, bonds, invest, right? And now if you Google Fidelity, Bitcoin, right? 10 years ago, Fidelity was mining Bitcoin.
Right.
But they'll tell us that Bitcoin's not wealth for us, right?
Of course.
So what we're saying to an insurance agent is, I call it the small fish mirroring the big whale.
Right.
If we can mirror what real banking and financial institutions do, the numbers may be a little, zeros may not be as long, but we can still better understand what they're doing so we can educate, build wealth for ourselves and our family.
The
and that's where
small
we're
fish mirroring the big whale.
Yeah, I used to watch Wildlife Kingdom.
Great analogy.
Yeah, I used to say it was always just a fish. He would always follow his big whale, and I said, well, that's how it is in the banking industry, financial services. We all talk about mirror. We all talk about learning the game, right?
Yeah.
Where everyone talks about that, right? But no one's given us the right kind of playbook. They've given us a piece of what they wanted us to learn, and that which was to work linearly. These guys are working. Are working vertically.
Yeah.
And then by the time we actually find out, if we ever find out, the most production side. So it took me 30 years to realize I was in the wrong business.
Yeah.
See, I thought that I was in the insurance or financial service business. They're in the compound interest business. They're in the compound interest business. They're in the monetizing of assets and compounding interest over time. They'll give us the rule of 72.
Yep.
Right. How long it takes money to double over,
18 years, right?
Over time, right? And they say, okay, well, listen, if we'll go ahead and you have 8% interest compounded, your money will take you 4 or 5 years to double.
Right.
But this is what's interesting. They may give us 8% a year index universal life over time, right? Compounded over 20, 30 years. But then the question is this: they're making 8% to 10% a month on our money.
Yeah, that's the game.
So they're giving us 8% a year. But the banking institutions, hedge funds, and financial service firms are making 5, 10%, sometimes higher, 20% a year on our money.
Ladies and gentlemen, you're listening to the Future of Insurance podcast with Fire and Flow. This one's excited. He's very passionate. He's out in the field. He's doing a lot of stuff. This one flows. He's got that good, easy, balanced energy. So I know in personalities, people tend to follow. Some people like people that are more demonstrative. Some people like people that are more balanced. So we got a good balance here. We are now going to move on to the D in podcast. We're going to talk about, we mentioned Wall Street. We mentioned insurance. My brother and I, we had an insurance show on WRD about 7 years ago, maybe 6 years ago.
Mm-hmm.
And one of the word wealth underwriting reporting deposits / denials. So we're going to move into the delay, depose, defend. With the recent things that just happened up in New York, people are starting to understand insurance. They're starting to understand the money side of it. They're starting to understand just how insurance, like you said, they may pay out a small amount, or they may send you through all of these hoops and loops to actually get paid. How can you guys solidify which insurance companies may or may not pay? Being an insurance adjuster on the property and casualty side, I know every couple of years you have to get a little rough. And you have to complain to insurance commissioners. You have to complain to the Better Business Bureau. You have to actually talk about, what's that term? Where they're denying the claims, and you got to go contract of adhesion or breach of contract. Yeah. So how can a greenie or an experienced agent come in under you guys and make sure through insurance, through life insurance, through pre-needs, make sure that the insurance companies are not going to delay, right? Yeah. Or deny, defend their stance, and depose, meaning take you to court. So if people are seeing that term that just happened with the CEO up in New York, it's an insurance tactic through a book where they delay paying you. They'll deny the claim. They'll delay it. I had one claim in Minnesota where it took me 2 years with a certain insurance company to get the insurance company to pay for their roof and siding. Now, I was at the actual meeting where they sent out a third-party company to look at the property. They told us the property was wood, but when the adjuster was there, I tapped on it to let him know it was aluminum. He put not the adjuster, this was an independent contractor. I put a circle around that mark and I marked it with chalk. The insurance company then calls me and tells me that that's wood. So that's a tactic that insurance companies use. They deny, they delay, they defend, and then they depose. So how can someone coming over to you make sure that the insurance companies that you've vetted and you've been with and you've worked under, make sure that they pay your claims so you're not riding through the hood and something happens to you?
Well, let me tell you, I take a swing at this one because we could get into the health side. You got into the public adjusting side for the claim side for the PNC.
As far as insurance, how it works.
So far as the health side goes, and let me just back up about Vector 1, Vector 2. If you personally owe a debt or your agents actually owe a debt and it rolls up to you. Okay, that could be a debt too. All right. So I just want to clear that up for people out there. We're in the social media world, everybody criticizes everybody. On the health side, right? There are models that create on the health side that, generally speaking, that about 16% of claims, okay, to be profitable right now in America are denied on the health insurance side, okay? And then there's models out there that want to double that, okay, for more profitability, okay? And what's happening is sometimes this capitalism can go too far, okay? And people can get hurt out of that, all right? So those situations that, and it's horrible that happens, I worked with United Healthcare for, since they first started MAPD, since they first started Medicare. And I have nothing bad to say, especially publicly, but these things do happen. Okay, some of these companies out here have built algorithms and built systems, okay, to do their best to deny claims. Their whole business model is to try to deny claims as much as possible. Okay, that is a question for politicians to change to reform the entire healthcare industry. That needs to be reformed. Okay, and that could be a lot of politics, because you got a lot of people that want to make a lot of money too. See, they have they also have shareholders as well too. They're responsible for, okay, and they want to make as much profitability as possible. So on the health insurance side, when the individual health insurance side, it is problems. When Medicare comes along and the government has oversight over it, things are a little bit difficult, because a lot of that can't happen in Medicare. It does happen, but if it slips through the crack, there's some oversight, that can happen. It can be shut down. Things like that can happen. They can be sanctioned and things like that. So they have things like that happen, and these regulatory agencies are supposed to be out there to protect the consumer as much as possible. There's no education out there. The agents are not really educated on it. The clients don't understand HMOs or PPOs. They get, they're used to getting it at their job, and they're not paying for anything. And the doctor submits a claim. You may get a second opinion or something like that. And these things happen. And when these happen, they can touch people emotionally. They can get triggered. A loved one dies. They don't pay a claim. That happens. On the life insurance side, basically is after 2 years, unless it's fraud, they're really going to pay the claim out. If you make it 2 years in with that policy, typically they're going to pay that claim out.
Material misrepresentation or suicide, correct? Those are the other ones?
Yeah, so fraud or suicide. So my thing is, the first 2 years is the most critical. This is why I was talking about with the seniors. They play these games, okay? This is why I say you want to check do your medical information bureau first, because you want to have the checks and balances up front. So if somebody were to die, okay, that we already know that they already been through their medical first. So it's very highly unlikely that they not decline the claim to be paid out to the funeral. But see, if we can educate our agents from the agent side, because the agent is the field agent, okay?
Right.
Clients shouldn't be buying stuff over the phone on TV, because they're not reading anything. They should be seeing it from a educated field, broker, that I can sit down and show you, in black and white. Hey, listen, let's go check your medical first. We'll type in a computer. It takes 10 minutes. If you get approved by this carrier and you pay the premium, this thing is going to pay out if you were to pass away. Okay. Why? Because we're the A+ company that's paid out billions of dollars in claims on a yearly basis. They got a good track record. This is what they do. And I had a lot of claims. I had a lot of experience. So with doing that, I'm able to educate them about that first 2 years. So this way we have a plan. But what we're missing, especially in the inner city, is a living will, and power of attorney, because you need to be told, if something were to happen to me, this is the type of service I want. I want a traditional funeral. Okay. I want to be buried over here at this cemetery. Okay. I want this monies to be given here. Unfortunately, it doesn't happen. What we do is we take the life insurance policy, the funeral director get the death certificate. They'll just acquire all of the money. Okay. And just give you a little bit left, if there's anything left, after they sold it to you at needed service. This trend has been going on for so long right now. Okay. And it has to be done. We need to really advocate, okay, on educating these agents, okay, and saying this is the process of death. So let me break this down. Okay. If somebody were to pass away, okay, if they pass away in a home, typically, they could go to a morgue, a city morgue. They could be put in there. Usually they'll go to a medical examiner's office and find out the cause of death. that will go to the vitals and statistics office of that state, okay, so they can know what the cause of death actually was, okay. Sometimes they're wrong, sometimes they could be right, okay. It just happens. They can do another autopsy, you know. Sometimes they'll run a toxicology report, things like that, okay. The death certificate, you can get it yourself. You're the next of kin, or a funeral director usually will get it, find out the cause of death. You need that claim form, okay, so you can submit it for proof of claim of death, okay. Some companies, they will rely on a licensed funeral director, okay, to provide that information, okay. Why? Because they're licensed. They don't want to be in jeopardy of their license, especially in the pre-need world, okay, because they do have a license too. All right. And then they have their prices. They have to keep that on the wall. You know, they have to give people their general price list, or it's a $44,000 fine for not sharing their prices. I can walk in as a competitor to a funeral home and say, I need your prices. And they legally have to do that. Okay.
Oh, wow.
All right. Their
Good
prices
info.
can go up 1% every single year. That's their general price list. Some of them may have a general casket list too. Okay. So typically, if you're really educating somebody, I'm telling them, hey, you need pre-needs. If you're a very, church going person, you might want a traditional or a Catholic or something, might want a traditional funeral. And my question is doing funeral planning is to ask these questions properly. If you were to transition, Miss Jones, where would you want to go to? Okay. They would say X, Y, and Z funeral home. I look it up. Okay. The cost of A to Z service is around $12,000 plus this casket and everything else. We can lock it in with a pre-need. Okay. And lock in that price with the funeral home. They can't guarantee the casket, but they can lock in their basic services. Okay. We can lock in, we can freeze the price. Okay. And the purpose of that funeral home is to get an interest rate that keeps above and beyond the standard, inflationary rate for the funeral homes, which is about 1% most of the time. Okay. These pre-need policies stay in place. The retention is over 92-93% nationally. Okay. And they typically pay in single payments or 3 pays, 3 years or 5 years. Now they have 10 years, they have 20 years. So that could take care of the funeral because the funeral director already put what's called a funeral service agreement together, a contractual agreement together, but the insurance company is going to pay it. So technically the funeral director has an insurance policy already for that client for their services as a business owner. Final expense is considered for love, for legacy. It was never designed to assign over to a funeral home, as the agents are doing currently all over the country right now. They're selling final expense that this is the end all be all, and it's not. And the reason why I'm saying it's not, because it shouldn't be handled like that. Because what you're doing is you're guessing how much a funeral could cost. You don't know what the funerals are 10 years from now. Okay. They'll say, well, the average, we have a statistic on a piece of paper and it's outdated next year. The average funeral is $8,000. Where? Depending on what county, what funeral home. Okay. You could be in Prince George County. The funeral home is different than here in Philly. Okay. So totally different. You might want a cremation. Okay. What type of cremation do you want? Do you want traditional, view the body first? You want memorial? You want to stand in a picture? You want just a direct cremation? See, they don't ask these questions because you don't know the industry. You don't know the funeral director has to go in there and sign off next to kin and take that body and put them back into their cold room. And they can charge for that. Yes, they can charge for that. Funeral directors want to be paid in 2 to 3 days. They'll say it in their general price list. We need our money. Some of them will say, I don't even take federal insurance policies because they can only pay directly to the beneficiary that's on a policy. That means they're not assignable over to a funeral home.
And why would that be? Why would some people not want to take?
Or what?
If they paid me all the money, as opposed to paying the insurance company direct, you said, right? I'm sorry, not the insurance company, the actual funeral policy.
Yeah. So it works like this, right? You're paying a small amount of money, okay, to get a large pot of money from the insurance company. The insurance company is assigning over, okay, that policy upon death of a receipt that their funeral director is going to provide services rendered, okay, that the client made while they were living, okay, that I want this traditional funeral and I want all these services with it and I want to go here. Everything was already put together. If the funeral director owns the cemetery, okay, they can also put that in the price as well, into the contract. Okay. If they don't, that's different. So if I were to sell a senior right now, I would educate them on pre-need and final expense. I would make sure that they can get a policy in 10 minutes. I would check their MIB. I would help them with their will, living will, power of attorney, or I would get a family member involved. And if that family member is a blue or white collar worker, I would introduce either a term policy depending on their job, or I would introduce an index universal life insurance. That's how it opens up the doors. Now I'm keeping it in the family. Okay. Now I'm providing service inside the family. Okay. And if broker contracts are at 100%, you did $100 a month, you made $1,200 off that one person. Okay. They're going to give you 9 months of that up front. That's still a loan. Of course, you have lifetime residuals. I'm also going to ask that client, do you have Medicare? Let me take a look at it too. I'll be back for that. But let me talk to your son or daughter. We need to talk about that will, living will, power of attorney. If you provide service like that, that client's going to stay on the books. We took it out there. We're going to take it out their Social Security. It's still a checking account. So you're protecting the service to stay on the books as long as possible. You want residuals, right? Okay, so this is the game that we need to be teaching. So now they own their block. No one can terminate you. Okay, you didn't do anything bad to the company, not terminated for a cause in their policies or misrepresentation, or you tried to hurt a client. And the thing is, by me doing that and doing a Medicare plan, I just got him 2 policies. I also helped out Mr. Tyson, which is the son, by educating him. He might be a police officer, firefighter, some blue or white collar worker. Okay. I educated them about, or maybe have a pension or something. Maybe he's a teacher, maybe he's a 403B, and I'm educating them on that. So now I can take a little bit of that money and put it towards an IUL. So now I got another cell. He might be married. He might have kids. He might have all these other things. Now I'm insuring everybody in a house. One household. I'm not capped in a house, okay, of $800 or whatever. One household, you can walk out with thousands of dollars in one house if properly taught and done right doing insurance. Okay. And if you know how to bundle, if you call me the king of bundles, is because you want to bundle
bundles.
Ancillary benefits, hospital indemnity plans. We might want to, and this is just selling. Okay. Cause we ain't talk about, I know we talked a little bit about opportunity, but what I like to bring lead to agents is opportunity to get in front of people. My job as an independent marketing organization is to get you in front of people, not just to collect money and pay out and hustle you motivation all day of good word because of what I've done in the past. It's not the bill show all the time. I don't got to be the guy to say, yeah, I did millions and millions. Yes, we do millions of dollars in premium every month at our agency. But what's the point if the agents are not empowered to go out there and do it? They don't have agents that are empowered, very diverse agents right now, all over the place. And you guys are watching me city to city go to and recruit 40 to 50 agents every time I land in that city, right on YouTube right now or Facebook. Go to Bill Feggins. You can watch it, and you see every time I land in a city is 40 or 50 new agents there, new bodies I got coming in around the clock, because AI is put a business plan together that I'm following, teaching the same old empowerment system. So they empower themselves to get them out. That's why you said, who are you looking for? Not really green agents. Agents who have been abused, okay, that have been in these systems constantly, so they can find an exit strategy to say, okay, now it's time for me to get better products, higher contracts, keeping my book of business, teaching me how to field market myself, getting me into systems. I mean, we have IUL leads right now people can get for $20 a clip, fresh. You can send them a funnel, re-educate them. And right now in 2025, and I know we didn't talk about this, that old IUL way of marketing right now that they're doing right now of splitting it with somebody experienced like Tyson and say, hey, let's do a 50,000 Zooms with a teacher. That's dead. They can watch a funnel. They can go through an educated funnel, okay? 13 minutes of it. They can fill out what is called a financial needs analysis. That's just some information that I need to find out what year you want to retire, how much money you have, how much money you want to retire with. Do you smoke, you have nicotine, whatever. It filters that out. I can give that directly to a carrier, not to a broker, to a carrier. Carriers they call it internal wholesalers, by the way. So they don't tell you this. An internal wholesaler works for these big companies. They can do case design for you. They can illustrate IULs for you, train you, teach them how to put them in different apps, like an iGo app or something like that. So it can go in a system and then they can start the underwriting. Now in 2025, underwriting is going to be upfront. A lot of these companies are going to use the same techniques I just told you about using with LexisNexis, where you can get through the approval, the health insurance approval first before we even illustrate. So now RetireEDU has a system in place where we can hit all social media up, target teachers, target federal employees, target people who are in debt, who are looking to get out of debt, watch a funnel video, fill out something, okay? We got an F&A off them. Send them an email or a text back. A bots will do it. Tell them, fill this out. Let's see if you get approved. They fill out a couple health questions. Bingo, they get approved. They actually ran a real background. Completely skip past paramedics, completely skip past everything else, get them approved. And the next thing you know, I'm doing illustration at 100% contract. What? That's the new wave. And you're sitting there focused on making these agencies all this money, okay, so they can go public. And with no leads. I mean, imagine me giving you a 60% contract, I give you no leads, and you go out and you go to network events, you get all your family friends, you're hyper, you're excited, got you all pumped up. You're like, oh, I'm the next, I'm getting this new title and everything. You all pumped up, and you're like, oh, I'm gonna get to a 70%. And they got you in, and all you is called a associate chairman of the board. It's like some other title, whatever title. It's all crap. It means nothing.
Title approval.
Yeah.
So
that's the game.
I have a phrase that poverty will cost the rich their souls and the poor their goals. So what I mean by that is keeping someone in poverty will cost greedy people their souls, and it will cost the rich their goals. There are a couple Bible verses that I love to apply to what I do. Proverbs 31:8-9. Speak up, defend the rights of the poor and needy. Speak up and judge them fairly. Make sure you're administering justice to them that are being crushed. So crushed, poor and needy is not always about money. It's about access to information. It's about staying direct to somebody who's just going to leverage off of you, fire you at any time, like you're stating. But also, it's access to capitals. It's access to training sessions. So with that being said, we're going to move on to the contingency side of you being in insurance, why it's a good thing, why it's a bad thing. I don't think it ever could be a bad thing, but you also have chargebacks. That's another C that we're going to talk about on this C for the acronym podcast. And we're going to talk about captive. Brother Tyson, if you could.
Well, I think that in the insurance business, from some of my mentors I've seen, and I'm talking some of the largest marketing organizations in the history of insurance, that we call it self-insurance. That chargebacks in the insurance business is an unfortunate reality that comes with the way in which the insurance industry is designed, right?
Yes, sir.
Bill talked about that earlier. When you're advanced to commission, it's an advance. It's a loan against future additional revenue. And Bill talked a lot about that in the contracts at the summit in terms of when you're advanced that commission. A lot of times, the only way that if that business falls off the books, then you have to continue writing. So I began to understand that that everything that we do is still the management of debt. It's the management of cash flow. So if you don't have a business mindset, and we just see it from an agent's perspective, then we don't understand that you have a certain amount of time to generate as much revenue and cash flow as you can, so that you can diversify your portfolio,
Right.
self-insure your agency with other products and services, so that if your product, if someone falls off the books, you have additional revenue and cash flow to sustain yourself. And that's really important from a business perspective. I mean, whether it's $100, $1,000 chargeback, or we know folks who've had $300,000 worth of debt roll up from agencies. I know organizations that were carrying $100 million worth of debt, depending on how big the organization agency is. It's a part and parcel of the business. But this is what's important. What's important, though, is that when you look at it from what Bill and I are saying, and you diversify, you bundle your portfolio, you have other revenue streams that you're working with your client, right? Now you're not dependent upon just the final expense. You have the Medicaid, you have the supplemental employee benefit insurance, right? You have the retirement aspect going. So we have to see ourselves as a full financial service operation, right? If a lot of folks will say, well, I'm just focusing on term. Well, only 1% of all term insurance products ever actually pay a death benefit. 99 to 98% of all term products actually falls off the books. And
so that's all free money.
That's
for
all
the
free money.
insurance industry.
Correct.
It's
all paid premiums,
Jeez,
and they
all
invest
free.
into it. Don't think they just making money off a premium.
Yeah. But now the other part is that and it's also giving the right product to your client. And that's something that Bill is an expert at, is making sure that, there's that when you service that client, you also are servicing your business. You're also making sure that client is happy with what they have and they understand the value of what it is that they're doing. And when you approach a client from like a pie chart and you help them understand all the other variables that's in place, the likelihood of them staying on the books and staying with you is greater. I don't know, if anyone's from Jersey. I remember, there was an old ad. It says our best our best client is an educated consumer. It was old Sims ad for those who've been in Cherry Hill area, New Jersey, right?
I remember Sims.
And that ad always stuck with me. Stuck with me as a kid. And then so it's important, right, that we look at it kind of like holistically. But in our advocacy for insurance agents, a lot of carriers are not going to teach it to you properly. They're just going to wind you up, and they're going to make you a one agent, focus agent, and they're going to say, don't worry about all that stuff. Just focus on this one particular product. You know what I'm saying? And you've left a ton of money on the table servicing clients. I was taught in an investment banking conversation, but the needs have changed. Our communities changed drastically. Right. You know what I'm saying?
That way of marketing, Tyson, is over.
Yeah, you know what I mean? So if we take a seminar approach and we teach an agent how to create their practice, financial needs analysis, finding out the type of clients that, the issues that's happening in their family. For instance, something as simple as say, well, it's not simple, but a child's education. Well, okay, why would I sell a person an IUL that's 65 years old, because that's almost very difficult for them to save. Right. But that same person, 65 years old, can purchase an IUL for their grandchildren.
Correct.
Right. Save tax deferred over time, still be the owner of the policy, right? They could be the beneficiary of the policy, but then create a college fund for the next generation, right? You put that tied into.
But if you have one bullet in the chamber for one product,
and as you were speaking, I call you guys fire and flow. So I'm going to give you the acronym of flow.
Right.
Finding lines of wealth, or familiarizing lines of wealth. Right. So when you have a flow of income coming in from multiple areas, diversity, they say that the average millionaire needs 8 lines or 8 streams of income. Also, I know that 1,876 millionaires are created every day in America. I would have to think that a lot of them have to be from the leverage. Finding leverageability off of wealth. That's what I'm going to say. Absolutely. The flow is finding leverageability off of wealth, and scaling and growing, you have to have diversity. You have to have cohesion. You have to have a bunch of people pouring in like a potluck. And that's what we're trying to get you experienced agents who are out here watching, that this is like a potluck. You got to bring something. You got to bring your purpose, the opportunity. You got to bring, your directness, meaning that you're out in the field. You're directly in front of people. You got to bring your character. You got to bring your assets. You got to bring your strengths, and you got to bring your transparency to actually come into this organization with these experienced brothers that have been in this industry for such a long time, because they don't need anybody who they have to spruce up and pull together, because we're looking to build something really big for our community, so we can create something like a Black Philadelphia Wall Street or things like that.
No, and I appreciate you saying that, because the other part is that, we when we talk about concepts as Black Wall Street, wealth, prosperity in our community, you're here. Individuals talk about infinite banking, becoming your own bank. These conversations you hear a lot about on the internet, Instagram. I'm happy to hear these conversations for a new generation. Now that I've been in the industry, realized for almost 30-something years, there's a new generation of entrepreneurs who
and they want to get it fast.
Yeah, and they want to and getting educated about the different ways to build wealth, right?
Yeah.
And what's important about it is that you got time. Money is a time equation. So when we really get into variable, types of understanding how compound interest works, is time. But one of the things is that if as an agent, because this is focused on the agent, do you have a 1-year plan, 2-year plan, a 5-year plan? If I understood certain things as an agent now, I could have took $100,000, $200,000, put it in an index in an annuity 30 years ago
Yes, sir.
Right.
as an insurance
Of
agent,
course.
and I could have been wealthy.
Yeah.
Right. Just purely
Just left it in there,
just
right.
left it in there.
Mm.
So they told me how to be a good agent, but they didn't teach us how to build wealth. Think about that. So we have a tale of two cities. We got financial service agents dedicated to trying to teach our community how to build wealth. Our community is suffering for a lack of knowledge, right?
Hosea 4:6.
Right. And I think now we have an opportunity with what Bill is saying to bridge the gap, to put in certain missing pieces that will allow us to leverage, because we're all connected.
You know, when it comes to Tyson talking about debt, right? Debt elimination.
Yeah.
It's one of the new trends that's going on right now in insurance, right?
Right.
And this is, we talk about infinite banking
Right.
concept. People are trying to sell products that cost a couple grand to put inside systems to show, their car payment, their interest, their mortgage, their credit cards and stuff like that. The carriers can do that for you.
Right.
Because everybody's trying to grab products and make my like we have right now an estate planning model, okay? $50 a month or $500 a year, get a little discount. It includes a will and will power of attorney. It's not tied to a carrier, and it'll do at least a revocable trust, okay? At least that. And some other type of trust products too, okay? Why am I charging thousands of dollars to make an override off of that through other agents? I shouldn't be. So you got people out there doing that. You have people out there, you see, we don't have to do that, at least not through me, because I'd rather have the business than trying to sell you other software products, okay? But when it comes to debt elimination, these are participating whole life policies, okay? These are cash values and along with dividends, okay? And we want to make sure that they're high, close to almost 10%, whatever people can take out, some of that interest to pay down some of these debts, okay? So debt eliminations, we can use funnels now to educate. Like if people go to RetireEduConnect.ai, my funnel will pop up. You'll watch a 2-minute funnel. Then you'll watch a 13-minute funnel. You select on Calendly, and you actually can talk to, somebody, a debt elimination specialist. That lead will go to an agent, of course, a broker, and they will get that, and they can sell you a carrier that does those whole life participating policies. And what we do is we look at somebody's monthly income and how much they pay, for their mortgage, their car. I'm just giving you a couple examples and how can we cut that time frame down of it's going to be paid off in, let's say 20 years, to cut it down to 10. So how much can you pay a month in this policy? And we can offset that along with the interest rate and along with those dividends we can pay that down.
And that's interesting that you said it. I just had something pop up on my social media stating how someone could pay off. There's so much information on the internet, and you're inundated with so much marketing and psychographics and fear and why you should buy stuff and why you shouldn't and who you should spend time with. And this person has a package to sell you. It's so much on the internet. But I did just hear something stating that you could pay off your mortgage using an IUL. So I am so grateful and thankful for the information that's been shared here to actually help people grow and protect their assets through RetireEduConnect, with your expertise in insurance and your expertise in financial services. And I have the property and casualty side where I can actually indemnify someone to get paid for property damages in their home or business. So in closing and almost wrapping this up, why should someone join RetireEduConnect?
I think if you go to my YouTube page and you watch a lot of the videos and you see how we train, right? Webinars, videos, we're transparent. We're teaching a game. It's coming over not just to get a high contract, but it's coming over to get on those Zooms, to get the training, get the carrier to train you, to maintain of course, your book of business, your dignity, your morals. Okay. A lot of people have been burnt, hurt, okay, out there in the industry. and some people have gained too. So I'm not knocking them, because I know a lot of people in my caliber right now in Atlanta and the DMV and other areas who are very successful that created those models. And I'm not knocking. They caught them early. They got a state, themselves. They're making $1 million a year. But again, there's algorithms that if you make a little bit too much, they'll somehow try to term you, the carrier itself. So I'm not here to knock or to say anything wrong about anybody, because I get it. But there's more people out there that have been churned and burned, okay, that went around this hamster wheel over and over again. RetireEDU is the new wave of marketing for social media platforms and to get the message out, and creating creatives or creating funnels to re-educate them about financial literacy. Okay, not the old way of doing it. The old way of doing it is where the agencies, again, they were making all the money because we got to teach you what an IUL is. So you got to talk to your upline to split it, and you had a lowball contract. Those days are over. Okay, they don't work. It's just for agencies to go public. You don't want to be paid by RetireEDU, let's say. Okay, but my thing is that if you come in and you see all the tours that we're doing, you see all the cities that we're going to, we're having the same message, and we're talking about empowering you through, again, banking, creating an LLC, talking about financial literacy, like something Tyson's doing. Tyson has real gold and silver bullion. Why are we not talking about that? Okay, which I want to tap into in a second. Why are we not talking about crypto? Just because we don't understand it. Because every week I buy crypto. Every week, okay, decentralized or centralized exchanges, I'm buying them either from Coinbase or Uphold or something like that. I know what's going on with XRP. I know what stable coins are. I know what RLUSD is. I know what these things are. I know what's about to happen. I know the type of GOP that's in there now. I know we're a pro crypto. I know what's going on. No one's talking about it. You know why no one's talking about it? Because you're supposed to just write business, jump on calls all day, be brainwashed by some agency or whatever, make the upline some money, sell a high ticket product to somebody in your neighborhood, write it up so you don't get a vector, overwrite the chargebacks, okay? The same system, overwrite it, okay? Hamster wheel all over again. You're chasing. You don't own anything. You burn your car out. You burn your life out. You burn your wheels out. You're not making anything.
Family out with a new
family
product.
out. You keep talking about the same thing over there. You got nothing creative to talk about. You got one product. You could be servicing, multiple products in one household, earning everything. So this way, what is time and financial freedom if you don't have no time and then you have no financial freedom? I want to have financial freedom so I can have the time, right? Isn't that the equation? Okay. I'm not trying to do some anti-equation. I'm trying to have a connective equation where I can have financial freedom, own it, and walk away from. If I wanted to walk away from something right now, I could 6 months walk away from it. That's the type of income you have. And you talk about diversifying your income. Absolutely. I'm not here to just sell one final expense product all my life. I'm not here to sell just Medicare all my life. I'm not here to sell IULs or debt elimination all my life. I'm not here to do that. But it's cash flow to me so I can invest into other things. So if it's real estate, if it's crypto, if it's gold and everything that Tyson has, is to show real financial literacy, because you want to inherit something so you can pass it down to your children's children. You have no trust in place. Your home is not protected. You got vulture gentrifiers running around trying to steal mom and pop's home. You're there with commission breath, don't understand what's going on in the industry. But when I talk to mom and pop, who I'm talking to in the home, in my third eye, they know I'm near the service. I'm selling me. They're buying me. They're not buying the insurance. They're buying me because I'm educating them on their own policy that they didn't know. It's not their fault. They didn't know that this is garbage. Okay. It didn't go through an MIB first. The agent who sold you didn't understand. That's called clean sheeting. They just pushed it through, just pushing everything through. Okay. They don't know if they're graded or if they come up or whatever. They don't know because some of the agents are not trained right. They don't even ask the question. You have to justify for, let me see your prescriptions. In Medicare, let me see your prescriptions so I can match it, make sure we cover your prescriptions. A lot of insurance agents out there, they're not even checking that. They just want to get you a policy, what you can afford, guess how much a funeral is. They don't even ask that. They just there to write you a policy. And they'll try to write everybody in the house a final expense policy. They'll try to write a teenager a final expense policy that's healthy. He should be getting term and policies, that a parent should be, a responsible parent can pay $25 a month and get hundreds of thousands of dollars of money in it. Okay. So, and they can be responsible people. The system is broken because they don't want us to know. They don't really want us to know true tangible assets that should be in our hand. I should be taking my money and buying what Tyson has right now.
Well, it's just a great segue. Thank you. And one of the things is as I begin to really understand the market, and Bill, I appreciate what you're saying, is that when I would go to Wall Street, I would go to the different investment banking seminars, I realized that the whole system is financially engineered. We're financially engineered.
Yeah.
The banking system is financially engineered, where you put $100,000 in, they pay you 1% a year on a CD, maybe 3% on a money market account. The insurance industry is financially engineered, but you need to be a accredited investor to invest and have money in a hedge fund,
Right.
where they're doing 120% every 3 years.
Exactly.
Right.
That's a fact.
Right. So there's Tale of Two Cities. You have the
And the politicians tell them that they want to be
Right.
accredited or whatever.
Come on.
Who's accredited?
You have, two banking systems. You have a private wealth management banking system, where if you have a certain amount of assets, you go to the High Rollers Club or the 20th floor of Wells Fargo. If you are a middle market person, you get a checking account, savings account. There's two different worlds.
Jeez.
Right? So, we may not be able to go into the detail, but one of the things I realized that we're doing is that all of the investors and wealthy individuals and private family offices were purchasing gold and silver as a part of their tangible assets. And I said, something, 99% of financial service advisors and insurance folks are never taught about tangible assets. Why? Because they're financially engineered sales. And we're financially engineered sales individuals to sell certain products, right? To keep the system that way going, and derivatives and compound interest, right? But then
For the elite.
For the elite. But the elite is taking out money and they're buying real money. J. Paul Getty said that the only money is gold and silver and everything else is credit. It's all debt. So I have here just a quick picture when we go into this. Is a real 1 ounce silver coin. This is real money, bankable anywhere in the world. Wherever you go, it's accepted as real money. Everyone talks about the great global reset. We understand what's happening with the BRICS. But guess what? All that affects what we're marketing right now in the financial services, right? This right here is a 1/10 ounce coin, gold coin. This is real gold, right? We educate our agents on that, so that once you create a certain amount of wealth, what are you going to do with your wealth? You diversify your portfolio. So we mirror what the wealthy do. This right here is this is a MS70 coin. Silver coin, all right, goes up in value. So if a person purchased $50,000 of gold and silver between 1986 and I think 2000, $50,000 of gold and silver. If you look at what's happened in the marketplace, where gold and silver was $400 20 years ago, now it's almost $3,000.
Right.
You would have almost $1.2 to $1.5 million just in tangible assets. So I asked myself, I said, well, how come we're not learning these things? And I talked to Bill about it, and he said, let's do a summit so we can integrate all of the financial service information.
Right.
And then what we can do is we can actually put together a true financial liberation plan for ourselves and for our family. Financial liberation. I was studying some. I said, we talk about financial success, but it's to liberate, financial liberation. That way, because no matter what happens to the geopolitics of the world, geopolitics of this country, the reality is if you're financially independent, financially free, and you're able to take care of yourself and your family for generations to come, that right there is what the true basis of what we're here for. If not, what happens is that we're just flying in the winds like leaves, whatever happens in the political economy.
And not to interrupt your flow, but this is pun intended. Financial liberalization optimizes wealth. I just wanted to give that to you. As you were speaking,
you have the best one-liner.
That's the flow.
You got the best one-liner.
That's the flow of what we're creating. Yeah. And you also said something about J. Paul Getty. He also said, I'd rather have 1% of 100 people's efforts than 100% of my own. Right. So let's say if both of you guys were on my team and I had 98 other agents, and 10 called out sick and 10 called out slick, I still have 80% production. And that's the purpose of RetireEduConnect.com is they're going to get theirs, but what they want you guys to understand to do is to create your own leverage automobile, where if you're going to train and teach and recruit, get compensated for your time, because that's the only thing that you can't get back in this world is your time.
Yeah.
So we're looking to help you guys create leverage. That's the purpose of what we're doing. That's the purpose for the summit. That's the purpose for
I do want to
Divine
say something
Insurance
about
Group.
the summit, because see, the summit in 2025, is a summit where I want people to come in, okay, to different parts of the cities, okay, just like they have all these summits, okay. And when I go around and I have brokers come to my events, I don't charge them anything, where other agencies will. I'm going down to Atlanta in January, right? I'm not charging nobody nothing to come. And we're doing recruiting, we're doing training, we're doing everything. It's a boot camp.
And you'll be in Orlando next week, right?
I'll be in Orlando next week. I was just in the DMV yesterday. A few weeks before that, was here in Philly. We did an event. I'm constantly almost every week going to different, cities, because what I'm developing, and of course AI wrote it all up, is the Future of Insurance Forum. Okay. And that is where we can bring industry experts to come in, teach, okay, how to structure a business and how to develop business credit. Okay. We do need that. Be bankable. Okay. So we're empowering you. We have speakers that could come up there. We have workshops, okay, at these places. We're going to have carriers there, okay, so they can have their summit. They can have their vendors there as well. And what this summit is going to do is, as we go to tour, an agent can walk in there, almost a green agent, and walk out with an LLC. Okay, walk out to be bankable. Okay, at least know the posture and the structure for it. Okay, and be educated on it. They'll get the right carriers, they get the right training, they can plug into the right webinars, they can get the right technology, they can get the right funnels, they can get the right education. Okay, so they can get the best clients, they can educate them, so they can be a servicing broker and understand that, hey, I have a few products here that can help you with. Because you're a senior, I know I can help you out in the Medicare area, and I know I can also help you out in the final expense area. I know if you're younger in my age or our age bracket, I know I can set you up for an IUL. We want to find out when you want to retire. Is it 65? Then we want to come up with a 10, 15-year game plan depending on your age, okay, that can meet your goals, your needs for retirement planning. With retirement planning, we also want to add in some long-term care with that IUL. We might want to add income protection. We want to add living benefits inside of there. If it's debt elimination, a lot of people are in debt because they have student loans, okay? So we want to have these participating whole life policies to help people set them up to get out of debt faster than what they would in other government programs. Then we want to empower them about estate planning, okay? So we want to have a whole workshop based on that. So there's 70, 80 different trusts out there, okay? And people want to have a trust for yourself, a family trust at least, set up for yourself, because you want to bypass that probate. You want to keep your tangible assets. You want to keep your assets, of course, gold. So you want to have these trusts. And I want to ask agents, brokers, why you don't have a trust, in place, and why you don't have an LLC under that, and why doesn't it have a business license, and why you don't have multiple of them? Because you don't know. So you don't even have a veil. You're not shielded under anything. Okay. You're exposed to stuff like that. When you start making money, you should have an accounting firm. You should have retainers on lawyers. These are the games that they play, out there that you have to have, because games could happen. And when I'm watching big people, making $100,000 a month or $200,000 a month, and when they get clipped, from some carrier because they were selling one product, it hurts. It will hurt them.
Jeez,
it hurts real bad. Okay. Because you're taking a lot of money and it's nothing. And when I'm watching it, it's like, well, what did you do with that income that you were getting on a monthly basis, instead of just having all these Zooms and webinars and rah-rah parties? Again, praise recruiting. It does not work, because they own the book. They own you. They own you.
Yeah. And Bill, I'm glad you mentioned that, because one of the things is this, after being in business for 30 years and seeing so many roller coaster rides in the economy, then seeing roller coaster rides in different business opportunities and what's happened in the insurance business. I was there with Buy a Term, Invest a Difference. I was there when Variable Universal Life and mutual funds said, you can't even say mutual fund anymore. That's like a cuss word, right? You had, whole life, infinite banking, family banking, right? Now Index Universal Life is here, right? Variable, index annuities, right?
Right.
See, what happens is that the financial service industry creates these products and drips them on the public, because they need to find inventive ways to keep the cash flow coming.
Yep.
That's number one. Two, that's for the consumer side. Then for the agent side, they have to keep inventive products to keep what? To keep the agents marketing and selling, right? So you may have 1 to 2 to 3 years run with one particular product that's exciting, that captures the imagination of your agents and agency.
Yep.
So what Bill is saying is that when that run comes and you have that opportunity to make 5, 10, 20, 100, 200, 300, $500,000 a month, when you're at the top of the mountain, we highly recommend you quickly diversify. Put your trust together
immediately, not quickly, now.
Put your corporation structures together.
Correct.
Bank your money.
Right.
Diversify. Set your family up properly. If I'm saying because it's not nothing lasts forever, and so now when now kind of putting ourselves structuring and posturing ourselves right in the marketplace, we said wait a minute. I had to ask myself a question. How many agents are being taught properly how to run a business?
None. Why? Because it's a disincentive.
We've only been taught just to be an agent.
They don't want to, because the second that we train you to be financially free, you out of the matrix, okay?
Right.
You got a third mind. You're not going to have a dependency on that agency leader or that carrier. Okay, because you're financially free. My thing is that if somebody would have taught me, I'm glad somebody did teach me crypto back when XRP was at 20, 30 cents, and I was buying it all the time. Don't stop. You better not stop buying it. Buy that. Buy anything with an X, anything utility coin you buy. XLM, XCDC, you buy. And that's it. And I'm glad that thing shot up to $2.40. Right now, I don't have to make nothing up right now.
Right.
Okay. Eventually it's going to be enough in there where I could probably just complete. Well, it's going to happen because I got enough in there, and I'm a walk. It's going to happen. My God, like they just want our sweat equity. They are literally, we're just commodities, and that's it. Yeah. And our brothers and sisters that are running around here in the DMV, I'm watching them going under agencies because they're looking at some big shot Rolls Royce stuff like this. Nothing wrong with having nothing bad. Okay? I get that. Okay. But you're running around looking at this guy or this girl, making this money that own the agency. Okay. They own the agency. Okay. You don't own anything. Why are you showing off? The only people you need to show to is your family. The only people that care about you is God and your family. RetireEDU is financial freedom at most. For you to open up. I can't keep doing mental lobotomies like you say all day. I have to charge for these now. Tyson, I can't.
Well, the mental lobotomies is getting a little pricey because it's the financial matrix. It's the matrix. And the Matrix is such a powerful movie because we talk about that all the time because we've been hardened to think about ourselves a certain way, and we haven't been taught that we're the one. The object for what we RetireEDU, what we want to do with the summits is actually free. We don't want worker bees. This is not designed to have a ton of just agents. This is designed for those who are prepared for that next level of freedom, and to free people's mind business wise. So that they're given the right information so that they can take care of themselves and for their family. So this position is important. Case in point, just talk about that question about the gold silver. Everybody talks about the BRICS. Everybody talks about the great global reset, right? Everyone has these great conversations about what's coming down the pipe. Well, this is the thing. Wealthy people are in position to prosper, regardless of what happens to market conditions.
Good or bad. Up or down.
Up or down, regardless to what. And I was intrigued by this as a kid, trying to learn the game. I said, what is it that they're doing? What do they know? Right? Why is it that regardless to what happens in any market conditions, you still have people become even more wealthy during economic downturns? What understanding do they have about the market that I didn't have about the market, or the masses didn't have about the market? So this process of what we're doing with RetireEDU in education is so that we have a full spectrum, but also a deliverable. Personally, I just, at this phase of my career, don't want to have great powwows and great conversations and no deliverables.
Right.
I've been a part of some of the best lecture series and information between my career. I've seen the best of the best. But then it gets to a point that, after the conversation, where's the execution? Where's the deliverable? And that's where we're at.
We've been up on Wall Street back and forth, me and Tyson. We're seeing the power plays. We're seeing what's going on out there. It's right there on YouTube. This ain't nothing. We're not hiding anything. This is just what it is. I don't care about people comment on me or whatever like that. In my life, controversy sells. All I'm gonna do is get more agents anyway. I'm up here. I'm on YouTube. I'm on Rumble. you know, people can find us. People could go to RetireEduConnect.com, you know, and they can find us. You could go to our YouTube page, RetireEduConnect. You could watch our bots. I mean, we have bots, staff, AI. Things are changing. Things are being more transparent. Tyson's talking about having tangible assets, protecting your assets. You know, we were talking about with VELs, with trusts, you know, putting them under VELs, having multiple LLCs. These are the babies. People should have S corps and stuff like that too. They've been in since Rome. This is water law. People don't even understand this stuff because you're not reading any books, you're not watching any lectures, you're just watching drama all day. I'm tired of the drama agencies all day. I mean, it has to stop, you know, because it becomes these agencies, they talk about each other. No one's making money because you're busy talking about this other person, because you had lowball contracts. Everybody's getting rich. And my agency right now, people respect me, they're following me, they're making money, they're making bank. Okay. And the reason why they're making bank, or they're getting thousands of dollar checks and things like that, because they have high contracts, but they're servicing, and they know how to pitch it right. They know what to do right. They know how to put it all together. They know how to have trust and building relationships, so these things can stay on the books, because they're teaching clients financial literacy. If you're teaching a client financial literacy, but then you're doing it yourself, they're going to follow you.
Yeah. And the other part too, Bill, is that with what you did in terms of adding the AI conversation to it, and, you know, we may not have enough time. I know this is the first of a you know, 3-4
Oh yeah, we definitely
series.
have an episode 2.
Things are moving at such light speed in the financial world that if we don't make the adaptation, you will have truly the haves and the have-nots, the shrinking of the middle class, and all those other economic factors are happening. But with AI, you know, it said that the AI won't put people out of business. It's the people that use AI that will prosper. Right. But then you also have the actual the robotization of the workforce, the job displacements that's happening. So we're at the AI of things. We're in what's called the fourth industrial revolution, which is the AI conversation, which is a big conversation, and we might be able to go into now. But what people understand is that we don't have time on our side like we used to. See, before you could say, hey, I got 5, 10, 20 years to put stuff together, retire, put stuff together. If we don't put those structures in place now, you may not have another opportunity to do it.
In the next year, Tesla will have Optimus, you know, that will be doing stuff for me, trading for me and stuff like that. Literally an AI Android bot. Okay. They'll probably be sitting here doing a podcast on episode 20 or something, you know.
You're going to put me out of my job?
Yeah, you're out of your job.
This is why I don't like AI. This is exactly why I don't like AI. But maybe I need to look at something that can systematize me, because so money only makes us more of what we already are. It's a multiplier. It gives us freedom. And as you were talking about freedom, flexibility releases every evil disposition of man. The evil dispositions is when we don't have enough, or we actually go when we get up under somebody else, and now we have that disposition because they're not teaching, they're not training, they're hogging it, and they're hoarding it all for themselves. So we're going to continue this conversation. You have been watching The Future of Insurance with RetireEduConnect.com. I'm your host, Brian Fagans. My brother, Bill Fagans, Tyson Price. Please drop us a like, hit the subscribe button on our YouTube page. We would like for you to continue this conversation. We also want to give you the information to privileged, right, people, because we're looking for dedicated, maybe a little disgruntled, and we're looking for devoted agents to come on board. So send us your information, and we can give you a time where we're going to put together the summit. So closing remarks.
You know, I would say this: send me your resume at info@RetireEduConnect.com. It's better for me to just look at everything, what you're going through. We'll get somebody to get back to you, or if not myself or someone, and to see what you've been through. Like I want to hear your story. I want to know what's happening out there. Okay. It's not always just recruit you to get an override off you. Okay. Anybody can do that. It's not just character. Are you servicing? What happened? What have you been burnt out? Because sometimes it's not their fault. They're just burnt out. You're just in a bad business op that was against them from the first place to teach you the game. Because some people are going to watch this. It's a couple types of people going to watch. Some people are going to watch this. I want more information. And then some other people are going to watch it. Says, I'm going through the same thing right now, and I need an exit strategy. How do I posture my way to get out of there? Okay. How do I I'm already with this carrier here. Yes, you can get another writing number with that carrier. Some carriers, you can get a second writing number, direct carriers. We can get you that, teach you, show you how to use AI, get you set up properly, start getting you leads, or start servicing your existing clientele, start making money right away. And then investing that money into proper vehicles so you know the game. So when you join in the summits, you already there around a group of people that are not just trying to sell you everything, but you're trying to get in some type of system and around good, good people like us who are bringing other people to the table, good peers, and good people who are professionals in what they do. Again, like I said, the summit we're coming out with so you can meet people who specialize in business credit. Okay. And not just trying to sell you a service or a system, but actually going through it with you on the banking side. So you can go to, a credit union and you can grab a no-doc $25,000 business line of credit from a card or a line of checking account. You need to do that a couple times, but you got to have good personal credit. So we got to teach you how AI can clean up your credit. AI can clean up your credit. There's a lot of things that you can use. You got to take to your advantage. Like, I didn't make the game. The game is out there. People are having corporations that pay less taxes. I didn't create that game. They did. Okay. I didn't create the IRS, tax code. They did. So my thing is, you got to know how to take advantage of these things now and stop being a commodity. Stop them using all your time and sweat equity for one or two people way above you to make all the money and tell you, don't listen to somebody like Bill Feggins. Don't listen to him. Don't ignore that. This is what I'm going to tell you to do. If you're dealing on the final expense side, call your company up and ask them directly, the company, agent support. Hey, can I buy leads outside, of this company? Find out, you'll get a nice answer. 2, am I vested day one? You'll find that out. You're not vested. Vesting is the most important thing. That means that when you cover that individual for insurance, that tail behind you of renewals will follow you for the life of the client. If that does not happen, there's a problem. Okay. You don't need to wait 10 years to have that. Number 2, I'm getting tired of seeing brothers and sisters putting on suit jackets looking nice, right? 1099s, not making no money, saying that they work for a big corporation. Okay. And you got to sell. They're getting denials. Not everybody wants that book of business because you may not have family and friends to go out there and really network like that. Brothers and sisters, come over here and get leads over here, sell proper IULs, get higher contracts, get paid so you don't lose a spouse. That's for real. This is real. This is real talk here. Okay. I don't want to have it where I know we're professional here, but we got to have real talk too. Stop it. You're not making any money doing that. Okay. Come over here, this model. You don't want to lose your spouse anymore. And I watch this happen a lot because you go in there and I'm a regional this and I'm a vice president of this titles again. You're 1099. You don't have no salary. You gotta go out there and write. You gotta go out there and do stuff. And this one product doesn't fit everybody in that community. And the underwriting is tough to get through. And you got to wait to get paid because they got to wait till to get the approval if you don't get a chargeback at a low contract. The summit is going to teach this so you can stay away from these things finally. And you guys can come to some consensus right now with the carrier, a marketing organization like myself, so you can join Divine Insurance Group or RetireEduConnect, depending on which way you want to go. So now you can service the whole person and everything with them. So when you come out that house, the house is protected, the assets protected, the family's protected, the education on the funeral side was created. The will, the living will, the power of attorney was created. That type of servicing is going to give you referrals to go back out there to service more people. Now you're making $100K or more by keeping and owning your book of business while you diversify that money now finally into other tangible assets with like Tyson, which we'll have at the description of the YouTube page, how to get access to that. But now you'll be able to buy crypto, buy other things, tell you to stay in that realm, in that world of people that circle of influence, because you want to audit your circle. Get rid of these people and start auditing circle and stay around people like us. And we're staying around people that's better than us. We're auditing our circles all the time. So we can have true wealth and financial literacy and wealth creation. So that's all I'm saying. Send me a resume. Look at my YouTube page on Divine Insurance Group. See some of the products. See what we do here. Join us. Ask questions. We're open book. Okay. Don't talk to your manager about it. It's not a job. Why are you in a job thing? I gotta talk to my manager. Aren't you an independent contractor? At least, aren't you a 1099? Why do you have that? Why can't you call the carrier and ask questions so it can be exposed? Learn, or are you afraid? And if you are, and if that model works for you, stay over there. God bless you. It's okay. We're not mad. It's not for everybody. financial freedom, and it's not for everybody. Some people are comfortable being where they are, because they want all that hype. They want that praise recruiting. They want that recognition. You did 10,000, you did 20,000 this month, not knowing it 3 months, 6 months from now, a lot of that can fall off the books, and you just chasing money, trying to replace it through new policies.
Chase and replace.
Anyway.
Ladies and gentlemen, thank you very much. You have been watching the first inaugural edition of The Future of Insurance with Fire and Flow. I'm your host, Brian Fagans. Thank you very much. Follow up with us if you have any questions or you would like to join the team. God bless.